Hello, today is the 23rd of October 2010. Good weekend, everybody. And in today's video, we are going to take a look at the silver market on the daily chart, the shorter chart, and the weekly chart. And we finally have had a level of correction within the market. A correction right now, that is through price. It can very easily become a correction through time if it ranges between the 23 to 25 level or 22 to 24 level. For maybe a week or two more, it would be a correction through price. But for now, the potentials of an intermediate term correction is definitely looming. As far as some Fibonacci levels are concerned, the bottom in here on the breakout, it's about $17.85 or so, and I think it's safe to round it to the 18 and then round the top part to 25. And when we do that within the Fibonacci, we have the 76.4, which says 23.13, and the 61.8 at 22.04. So therefore, right now, it is tagging along this first level of Fibonacci support. If this level doesn't hold, then the next one is 22. 22 would be a massive level of support. If you're looking to use Fibonacci to buy and sell, that would be one area where one may want to use Fibonacci to go long on the silver market or to cover any shorts that they may have, as it's an area that is likely to find support. And when I say likely, that means the probability odds would favor such an occurrence to take place. It doesn't mean it necessarily will, because when you blow by, when you get past Fibonacci levels very easily, then the next case scenario is that the next one would come into play. And the next significant one below 22.04 would be roughly near 20 and a half. That's still a while away from now, but we're even at the point now we're at 23.14. It's an area where you could find support. And if the intermediate term market is changing, then what this could mean is that maybe we rally up to the area of about 23.5 up to 24, and then that could very easily now bring us down to that 22 in a couple of weeks' time, as the intermediate term trend makes their pattern of lower highs and lower lows, which is what's been going on. We have the lower highs, and here we have the lower lows, so the trend is clearly changing. The trend line, the uptrend line that I was talking about for so long, we got above it here, found support, and it was unable to find support in this little area here. Thus, it found the level as resistance and then has went lower. We'll keep an eye on this trend line later on. It can very easily recapture it at some point. The 5-day moving average, which is the green colored line, it is now declining. We have yet to have had our first resistance test of the level. All rallies on the short-term time frame right now are guilty until proven innocent, but that gives us a little bit of contradictory information, because all sell-offs within all of these moving averages are guilty until proven innocent. Therefore, right now, this is telling us we are in a correctional period. It could be a significant top in here. For this level here is the 10-day moving average, which is now starting to flatten out along the way. And in previous times, when we've had a 10-day moving average rising as steadily as we have had here, when it starts to turn south, it has been pretty massive in past years. We'll see what happens on this roundabout. There's a lot of fundamental news, people talking about how the metals will continue to go higher. Lindsay Williams, for example, was on Alex Jones mentioning to be the case. The WebBot project mentions the prices to continue to go higher. And when we looked at the longer term charts, I'm not going to show the monthly or quarterly charts, but they are also stating that they will be going higher also. So we're having a correctional phase right now. We have another volume weighted average price in here. This is the 50-day moving average. So with the rising 50-day moving average, all of these sell-offs would become guilty until proven innocent, but it's still with the rising 50-day moving average at $21 an ounce right now. That means it is about 10% above this figure. There's still room for it to go lower based on the VWAP, based on this, and of course the Fibonacci level at 22. If timing works out well, or there's the coincidence happens, maybe the 21 level will meet up with 22 when the price action will come back to 22. That's another possibility, because on the short-term chart, we are now oversold, like we are on the long-term charts. We were way overbought on the daily chart, and on this chart, that has now stopped. And the trend could easily continue. Doesn't mean it will. What you want to see for a positive bias is you need to at least make a higher low. You need the 5-day moving average to flatten out. So if we can have a run up to this 5-day moving average, something like this, and then pull back, make the higher low, and then at that point, when it goes back up to the 5, that would make the 5-day moving average start to flatten out. You need to see that for any signs right now of this move that we've been seeing here to be that as a bear trap. Right now, there's no evidence that that would be the case as of now. This little colored line is the 20-day moving average. We'll finish this off on the weekly chart. And I was stating for a while within this range that the longer you're in the range, the bigger the breakout's going to be, because markets can correct either through price or they can correct through time. So after the bottom at the end of 2008, a run up higher, correction through price, run up higher, another price correction, a run up higher, which followed with a time correction, which had one small shakeout in the levels of $14, $15 an ounce back in February of this year. So we've had the market correcting through time, a run higher, and we've only had one consolidation candle this week. So thus, we are still going to need to develop some sort of support on this chart like we have on the daily chart. The daily chart, we were up so much, we have to develop some sort of support. Well, here we are. I'm not saying it's 23, but if we lift off from 23 and make it over 24.5-ish, or even 24, or hold the 23 for 5 days, then this will be that level of support. So on the weekly chart, we need to develop some sort of level of support. It really isn't up too much as of yet when you have two candles going higher. It's hard to see the red one here, consolidation candle, 4 candles higher, 1 lower, so therefore the last 2 candles are that of a consolidation from this gain in here. The markets can very easily go higher, but the intermediate term charts need to see that 5-day moving average, as I was saying moments ago, flatten out and turn around to the upside. As far as the level of resistance from 2008, this was 2135, which is very close to the 22 number in here. And the number is an approximate number. It's this one here, the linear says 2233. However, a lot of people will be using numbers, whether it's 1775. It really doesn't make much of a difference in here. If we go 1775 to 2495, it says 2190 and 2220. Generally speaking, the best would be maybe in between the exponential and the linear numbers, because the linear numbers are easier to come up with. The formulas for them are quite simple, where the exponential numbers are a little more complicated to come up with. However, we'll wait and see what the message of the market says. As far as the buying and selling on dips, whenever you have moves lower, then that's when you have buying opportunities. For example, we've been having some buying opportunities on each of these dips lower. What's the buying opportunities for? Well, that would be for every participant to figure out their own best strategy. If you're looking to make quick sales on different gains, for the most part, the easiest way to profit on that would be within the paper contracts, the silver SLV ETFs as one example, maybe the double log. But remember that at some point there's going to be paper problems, as a lot of people have been mentioning within the derivative markets. Thank you for watching and have yourself a great day, everyone. Bye-bye.